Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We provide actionable investment ideas and timely market commentary to hedge funds, portfolio managers, RIAs, and individuals. We help people get better returns in the equity portion of their portfolios. Really excited today to be joined by Paul Gray of IronHold Capital. IronHold is a value-based international investing fund. We've collaborated with them in the past. Paul has been kind enough to include me in his roundtable where he's brought on some of the world's best and most notable investors. His partner, Sid, is a phenomenal investor, and we did a great series with him talking about investing in India. These guys are the best around at that. And so for any of you who are interested, check out IronHold Capital, or we'll find a way to get you in touch with Paul. Paul, I'm going to hand it over to you. Thanks so much.
Thank you, Gary. Very nice seeing you again.
Great.
Wonderful. So, Gary, I wish we were speaking under better circumstances. You know, there's so much going on in the world today. We have a lot to cover. And the first thing that comes to mind is a recent comment that Ray Dalio from Bridgewater Associates made. He said, what's taking place right now in Ukraine with the recent invasion of Russia really challenges the world order as we know it. Can you kind of explain what he means by that?
Yeah, he's right. The situation, people think it's Russia invading a very small country, Ukraine, and that's the end of it. And, you know, on the surface, that's true. But what we're really seeing is a conflict between NATO on one hand, Russia on the other. China is backing them. And, you know, the part of the situation that I think we're most qualified to talk about today are the economic implications. And what we're seeing are the sanctions being applied by the United States are, instead of placing economic pressure on Russia, are actually affecting the value of the dollar as the world's reserve currency. And what we're seeing is a split now, where the United States used to have not just military hegemony, but economic hegemony. The world is now splitting into two different financial systems. And Ray Dalio is right. We are seeing a breaking apart of the existing world order.
Now, this couldn't be what Vladimir Putin and his council has suspected would happen, right? I don't think anybody would suspect that Ukraine, and you know, Godspeed to the Ukrainian people, how brave they are, that they could put up such a fight as they have been. Do you think that this was something that they had in their peer view, that this could happen?
So, you know, Paul, one of the things that my old partner from Silver Arrow, Raji Kabaz, would talk about, and Raji's a great investor, and he's somebody whose intellect I really admire. But there were times that Raji and I would be debating something, and a lot of times my answer to things is, yeah, look, people just do crazy things. And Raji would always say, I don't like that as an answer. He would usually say, let's figure out if there's a rational reason for people. Maybe they're wrong, but there's usually a reason. And it's a good lens to use. And one of the errors that I think that people are making in the West, including our politicians and our media, is there's this sense that, oh, Vladimir Putin, he's a crazy man. He's crazy. And he's a madman. And the problem with that kind of thinking is it's dismissive. I think, like you, I think Putin is wrong. We believe that the Ukrainian people have the right to freedom and self-determination. They should be a free and independent people. That's what we want for them. We think what Putin is doing is wrong, but this dismissive, he's crazy, so we don't have to think about him. We don't have to worry about him. That's false thinking. I think Putin is an extremely strategic person. There's a reason he rose to the head of the KGB. There's a reason he was, he has been president of Russia for so long. And, you know, if you just think about his level of planning and the level of response, the West brought to bear what we thought were crushing economic circumstances. And shortly after those sanctions were applied, the Russian ruble lost 80% of its value. Putin responded, and the ruble now trades at a level above where it was when we invaded. Russia is selling gas and oil at insanely high prices. They control a huge amount of the world's grain exports at a time when we're going to be facing enormous food shortages. And they control a huge percentage of the world's fertilizer at a time when crop yields are going to be hurting. And we have American farmers who aren't planting because they don't have access to diesel and they don't have access to properly or economically priced fertilizer. So at a minimum, we can say that Putin isn't a crazy person. I think he's wrong, and what he's doing is bad. We'd love him to stop, but dismissing him as crazy it's not an effective way of thinking. He's been incredibly effective at facing the worst the West has to offer and making sure his country is coming out of it all right. He's actually handled things from a Russian point of view very well. From a Western and Ukrainian point of view, obviously, we'd like him to stop.
Exactly. Well, and based on what you're seeing right now, how do you think this is going to play out? Do you think Russia will take over Ukraine, or do you think they're going to give up? What are you seeing right now?
So I don't think Putin is in a situation where, from a political point of view, he can give up. Nor do I think he's in a position where he needs to give up. I think there was a misconception in the West, and there's someone I want to give credit for on this thinking. But there was this conception that, Russia was just going to roll over Ukraine and it was going to take, 3 days. And I remember 3 days in, the Western media they were printing articles with the headlines, Putin is already a month behind. So Paul, think about this for a second. How is it 3 days in, he could be a month behind? Is that possible? Right. And we knew that. We knew he was a month behind plan 3 days in. It's not possible. The headlines were ridiculous. And the thing that people are forgetting is that he has a lot of military strength. He has a lot of economic strength, particularly with the price of oil and grain and fertilizer and gas, what it is. And they have time. They have time to continue to squeeze Ukraine. So the person I want to give credit to on this, back in February, I think it might have been March, I did a webinar with Heather Heldman. Heather is one of the founding partners of Lumina Group. She's a former member of the United States State Department, and she's a member of the Deep Knowledge Investing Board of Advisors. And to Heather's credit, one of the things that she said is, this is going to take a while. And I said, well, Heather, what do you think? Because the media is saying, a couple of weeks. She said, short version, 2-3 months, long version, 2-3 years. And Heather, to her credit, really understood that this was the kind of thing that was going to play out over a longer period of time. And the longer this goes on, the more the balance of power is going to favor Russia over Ukraine.
It's terrible. Well, hopefully things work for the best, I would say. 2 more questions on this topic before we jump back into the dollar.
Yeah.
How much effect do you think the the departure of Afghanistan, the way we left that, influenced Vladimir Putin's decision to invade Ukraine? And then also, what do you think about the fate of Taiwan? What do you think China's thinking right now?
Okay, so 2 different questions. One is, let's talk about Afghanistan. I don't think our opinion there is substantially different from anybody else's. The way we left Afghanistan was a disgrace. At a minimum, there are people that I know who have served in the military. There are people I know who have served in Afghanistan under fire. And the fact that they sacrificed, that they were away from their families, they faced moral danger, they lost friends, comrades, they lost fellow servicemen. And then we just exited with nothing to show for it and left billions. The people we were fighting was demoralizing. And it showed a lack of organization, a lack of purpose, a lack of seriousness. It was a disgraceful exit. I don't know that we were ever going to be able to accomplish in Afghanistan what we originally set out to accomplish, but there were better ways to leave than the way we did. And I think we communicated a lack of seriousness, a lack of purpose. And that hurt. And I think, Putin, being a smart guy, saw the writing on the wall on that and figured he could outmaneuver the current administration, which did not look particularly strong in the way that was handled. Your question about Taiwan, unfortunately, I would love to be wrong about what I'm about to say. Like Ukraine, I would love for Taiwan to be free and independent. I would love the Taiwanese people to have independence and self-determination, and freedom. I don't think it's in the cards for them. I think China will take Taiwan when they want to. And there is nothing that we can or will do to stop them. The United States has, for decades, maintained strategic ambiguity, right? Telling the Chinese, we think it's a bad idea for you to do that. We're not going to tell you exactly how we'll respond. And that ambiguity has worked really well. The current administration has bungled that message. What we've seen over and over again is messages saying we're obligated to respond, we're not. And then the other members of the White House press corps or saying, yeah, we didn't really mean that. It was an accident. We don't look organized or serious. More than that, I think we run into three problems when China decides to take Taiwan. One is we can't go to war with China. As much as we love the idea of being able to defend Taiwan, China is a nuclear power. So we start bringing aircraft carriers into that part of the world and start landing, fighting people in Taiwan. How do you go to war with a nuclear power? And this isn't China isn't a country that has one or two nuclear weapons where they could wipe out one or two cities. They have enough firepower to wipe out the United States. So we don't have the option. We don't have the military option to really go to war with them. I see two other problems as well. One of them is the best semiconductor manufacturing company in the world is Taiwan Semiconductor. That is run out of Taiwan. We have been telling people privately, I've hesitated to put this in writing. We've been telling people privately for years that the United States needs to build its own semiconductor manufacturing, high-end semiconductor manufacturing capacity. There are discussions with Intel and Taiwan Semi to build in Ohio. There's talk about plants in Texas. They need to do that yesterday.
Exactly.
Right. And the thing that I thought was really interesting is over the weekend, one of the Chinese high-level government ministers flat out said, Taiwan Semiconductor belongs to us. And I think what people don't realize is they are the best semiconductor manufacturing company in the world. Intel can't keep up with them. Intel has already talked about going more the AMD route and being fabless and just sending designs to Taiwan Semi or somebody else because Intel can't. Taiwan Semi does. Samsung and Qualcomm also make excellent chips, but we don't have a lot of good options. And those chips, by the way, are used in U.S. defense products. So think this through for a minute. China takes Taiwan. They take control of Taiwan Semiconductor, and we don't have chips for our military. This is not a good plan. The final part of the reason why it will be impossible for us to sanction China in the way that we have attempted to sanction Russia and done so very unsuccessfully is because China makes 90% of the pharmaceuticals consumed in the United States. Building a pharmaceutical plant, and remember, this is not like building a stuffed animal, a toy plant. Right, that this is very sophisticated equipment with very high levels of purity and cleanliness required. You can't build a plant like that quickly. They control 90% of our pharmaceutical supplies. So imagine a situation where Washington says, hey, China, you think you're going to take Taiwan? We are going to sanction you and ruin your economy in the way we tried to do with Russia. And China says, fine, then we'll kill grandma. Right? That's like, really play that out. What happens if China just says, we won't sell you the pharmaceuticals? And somebody might say, wait, but they want the money from that. They want to sell those pharmaceuticals. China will absolutely hurt their own economy to prevent us from interfering with what they see as their sovereign right to control Taiwan.
Right. So a lot said right there. That's a huge national security threat. And if you think about it, we have a way of being very diplomatic here in the United States where we could exert our influence just because we are the top of the world order today, right? For the time being. But Gary, what happens when we subcede our power to, say, China, and they take over and they replace the US dollar? Do we still have the same influence in the world that we do today?
No, and that's a huge problem. One of the errors that we frequently see in terms of people in the media and people in Washington is they frequently think in terms of political power and in terms of military power. Now, again, we know people in the United States military, and we have a ton of respect for them. And I fully believe that the United States has the best military fighting force on the planet. I think our soldiers, our fighting men and women, are the best in the world. And we do have the ability to project power. The problem is projecting that kind of power is insanely expensive, not only in terms of money, but in terms of life and lives disrupted. And also, when you try to exercise influence by force, you meet a lot of resistance, right? You're going to get a military response. And so if you're going to choose that route, it has to be sparingly and knowing that there's going to be an insanely high cost.
Well, what I mean is because most of the world is trading the US dollar today, we could exert a lot of influence without having to take military precautions. But, it puts us at a weird position if China takes over and they replace the US dollar, I would imagine.
Yeah, that's exactly true. And throughout history, a strong and stable currency have been a prerequisite to being a world leader, to being a prosperous free society. In addition to that, it's actually economic power that gives you influence in the world. The ability to buy products from people, to control their economies, to make them successful or unsuccessful is an enormous amount of power. And even if we go to military situations, like think about World War II. The Allies didn't win World War II because the Germans and the Italians and the Japanese ran out of brave, disciplined soldiers. I mean, the Japanese were prepared to fight to the last man. We won it because American industry had the ability to produce effectively unlimited numbers of fighter planes, bombers, tanks, jeeps, other weapons of war. Having that kind of economic power is a huge difference maker. Now, where we are right now, and a lot of people don't realize this, but the number one export of the United States is dollars. That's what we export. And if we go back to the early 1970s, Henry Kissinger worked out a deal with the Saudis, and it was for the Petro Dollar. And the agreement, what happened was the United States took the dollar off of the gold standard. That was a decision made by Richard Nixon, which we believe was a very bad decision. So the dollar was no longer backed by gold. So what did we do? We went to the Saudis and said, okay, here's the deal. We will protect your interests. We'll protect your military interests. But in exchange for that, all oil gets priced in dollars. And the Saudis agreed to that. And so we've had what's called the Petro Dollar. And the reason that matters is, Paul, out of all the countries in the world, do you know how many of them need oil and energy?
I would imagine all of them.
That's exactly right. And so every country in the world needs to have dollars in order to have energy. And what that's done for the last almost 50 years is created an enormous amount of demand for dollars. And here's what we've done with that. We've squandered that and run enormous deficits and run up huge amounts of debt, and we've debased the currency. And so a lot of times people will look and remember, like we just a year ago, 2 years ago, the Fed just printed $6 trillion at the push of a button. That we didn't create economic value. We didn't build anything. We didn't invent anything. They pushed a button, $6 trillion existed. 80% of all dollars in existence have been created in the last 2.5 years. It's 4 out of 5. That's a gigantic increase in the money supply. And then let's talk about another huge misconception. You know, a lot of people think US debt is about $30 trillion, which will remind you 2 presidential administrations ago, people were worried because it was $8 to $10 trillion. Mm-hmm. Trillion, and people think that's the number. That is not the number. That's the on-balance sheet number. The off-balance sheet number includes Medicare, Medicaid, Social Security, pensions. These are promises that we've made. And people try to dismiss that by saying, well, but those are promises we've made to our own people, so it doesn't count. We owe ourselves money. It's like writing yourself an IOU. Who cares if you pay it back? No, we've made commitments to our own people. And so the full accounting of that, depending on the actuarial estimates you use, comes to somewhere in the neighborhood of $250 trillion. Let me rephrase that for you. That's $250 quadrillion.
It's incredible. But Gary, let me ask you about that then. You know, so recently on my show, I had the famous SEC whistleblower, Ted Seidel, and he mentioned this. He said most of these pensions are not going to be able to pay back their beneficiaries.
That's right.
To that point, what's going to happen in the future? There's only a number of things that could happen, right? Either they could write the payment down, saying you're not going to get the money, or they're going to have to print more dollars. So for me to think about this, I can't imagine a politician to go out there and tell their constituents, sorry, guys, you're not going to get your Social Security, you're not going to get your pensions. So it really puts us at a very uncomfortable situation. But I'm curious to get your perspective on that.
First of all, Paul, I think you understand it perfectly. I'm going to make 2 points here. The first one is what can't be paid won't be paid. And for everyone who's listening to this, I assure you there is no way to pay off $250 quadrillion. It's not going to be done. And we can default in method A or method B, and you've laid them both out. Method A is to say to people, hey, guys, yeah, I know we said we were going to give you Social Security or these payments or take care of that. We're not going to do it. And you're right. Politicians can vote for that and they will promptly be voted out of office, and that vote will never pass Congress. So the only other thing we can do is a stealth default, right? And that is so much inflation that let's say somebody's Social Security payment, they're owed $3,000. I'm making this up, right? So Paul, we owe you $3,000 for your Social Security payment, and they give you that $3,000. And they say, congratulations, go buy a loaf of bread and a pack of gum.
Yeah, right? It's not worth anything.
Right. And by the way, you know, one of the things that we've spoken about publicly, Deep Knowledge Investing has advised people months ago, refinance your mortgage now. And personally, I did that last November. And the thing that I'm laughing about is, you know, I did 30-year paper, 10 years interest only. So the duration is longer than 15 years. And my joke is that I will absolutely pay off that mortgage. I will pay the bank every cent I owe them, either with 3 shares of Amazon, right, 1 Bitcoin, or, you know, a pack of gum and a candy bar. Because 30 years from now, the dollars that I give the bank to pay off that mortgage are not going to be worth very much. And so a lot of people look at the current inflation rate, which we believe is actually, it's not the 8.5% that the US Bureau of Labor Statistics talks about. We think it's double. We think the real inflation rate is in the mid-teens. If you are holding dollars, a year from now, those dollars will buy you maybe 85 cents worth of the goods you could buy today, or so, something like that. That's about what the inflation rate is running. And people think that this is a horrible thing, and it is. It's a horrible thing because it's theft. The value of your money is being stolen. It's being stolen by the government. It's being stolen by the Federal Reserve. If you own something and a year later it's worth less, where did that value go? Right? Well, it went to the institution that's printing unlimited amounts of dollars, right? And so people think, oh no, they've lost control of this. This, if you are the United States government, is a feature, not a bug, right? Because we can't pay off $250 quadrillion. What we can do is inflate away the value of it.
It's really sad to think about. You know, what's really concerning to me, Gary, is I know you study history like we do here, because we look back to the past to understand circumstances that we might not have lived through personally, just to get an idea of where we are in the present and where we might be heading to in the future.
Right.
And if you look back during periods of high inflation, a lot of times what unfortunately happens is the madness of the crowds, right? People start rioting. There's a lot of vandalism, a lot of criminal activity. Is that a concern that you might have today?
Yeah. First of all, we are seeing that today, right? And let's go back. Let's go back a year. We had 7-8 months of rioting in the cities, and listen, people have the right to be upset about an understanding of racial inequality, right? We're not insensitive to this issue. These are important issues, but we had 7 months of rioting and billions of dollars of property damage, businesses burned down, people who were harmed, who were killed. We are seeing that. And, the way these things always end, because you guys are at IronHold Capital, great students of history, what happens then? Either the left or the right, we start to elect a strongman who says, okay, everyone, don't worry. I have the solution. Give me enough power and I'll make it better. Right.
And Gary, just to point out, those riots weren't even price related. It had nothing to do with inflation. Right.
That's
so
right.
Can you imagine when people start paying, X amount for bread or gum, like you mentioned, how crazy it's going to get then?
Yeah. So I'll tell you where we see that ending. First of all, people are already getting, understandably, cranky and upset about the price of fuel. That's a really big deal because they need to get to work, right? I mean, the cost of just getting to work is getting to the point where sometimes getting to work isn't worth it. And that's a huge problem. We'd also point out the price of housing is up an enormous amount. If you look, the U.S. Bureau of Labor Statistics produces the Consumer Price Index. What we will tell you is that CPI, the Consumer Price Index, is a lie. They're using owner's equivalent rent, which is a nonsense made up number that doesn't capture real housing costs. Real housing costs have been going up 20% a year. And then the final thing is the CPI is showing anyone who believes food inflation is only 10% hasn't set foot in a supermarket in the last year. And we are going to be facing enormous shortages. And one of the issues that we run into as we try to explain this to people is they say, wait, we don't have a food problem. I went grocery shopping. I was like, okay, fine. Things are a little more expensive. But the supermarkets are stocked. And here's what people are missing. They're missing that Ukraine and Russia are the world's largest exporters of grain. And if anybody thinks Ukrainian farmers are planting right now, I don't know what to tell you, but it's not happening. U.S. farmers are facing two other problems. One is a giant shortage of diesel, right? You can't run tractors on solar power. They run on diesel. And then the second problem U.S. farmers are facing is Russia has decided not to sell fertilizer to the United States. That's their decision, but fertilizer is roughly a 100% increase in crop yields. So if you're a farmer and you don't have fertilizer or you can't buy fertilizer economically, you're thinking, wait a minute, my crop yield's going to be cut in half. It might not be worth it to plant. And so for all the people who are saying, wait a minute, we don't have food shortages, we'll remind you that food takes a little while to grow and harvest and package and transport. It's not the kind of thing where the supply gets turned off instantly and you see it right away. The grain that wasn't planted this spring, we're not going to see in July, August, and September. And that's going to be a huge problem. And there's an old saying, and I'm going to mangle it. You might know it better than I do, but it runs along the lines of we're 9 meals from the end of civilization, right? People who haven't eaten for 3 days, the rioting will be intense.
I never heard that one, but that really struck home very well, I would say. Point taken. I see Alan Lasalle here, brings me to my next question. He's asking, Gary, what do you think is going to happen to the U.S.? I would imagine he's probably speaking about the economy and the stock market. As an investor yourself, what do you see there? And also, we're both value guys. So one of the things that we're probably both concerned about is investing in companies that have pricing power that can keep up with this inflation. How are you looking at that today here in the US? And also, are you looking towards emerging markets at all just to find better opportunities? This is something that Seth Klarman mentioned recently in his interview with the Benjamin Graham conference.
Yeah, so a lot of great questions there. So the first one, so I think we've got three questions. I think Alan's asking about inflation. You're asking about the economy and good places to invest, and then the question about foreign investment.
I'm asking for me.
Right, exactly. So let's go to Alan's question first. He wants to know if inflation is going to come down. And the answer to that is yes, but not in a way you're going to like. So first of all, we do think food inflation is going to go up huge. There's going to be huge food shortages. The price of that is going to go up. Oil at some level, oil and energy at some level, you have demand destruction. Right. There's just a point where people turn down the thermostat, wear an extra sweater, or they decide not to take that road trip or get on a plane. There's just a level with fuel where people say, you know what, we're not going to pay $10 a gallon or whatever it is, and they use less of it. We also have put in writing multiple times that we think the Fed rate hikes are going to work. Fed rate hikes are extremely effective in reducing inflation. Let me give you two examples. I'm going to point out that the Federal Reserve at this point, they've only raised the Fed funds rate to 1.5%. Paul, historically, that's a really low number, right? We've gone from zero to barely above zero. But let's talk about the two things we're seeing. One is retail stores are already overstocked, right? Retail already, the physical goods, everybody's taking delivery, and retail earnings last quarter were horrendous because nobody's buying this stuff. People are saving money and using it on experiences and going to restaurants and on things like fuel. The other place we're going to see a huge decrease in inflation, Alan, this is getting your question, but not affordability, is in the housing market. And we've written about this extensively. So, Paul, one of the things we saw last month is the average price of home transactions has gone up. And I'm telling you, wait a minute, housing prices are coming down. How does that make sense? And the answer is because, it's the median calculation. Transactions are taking place at the high end of the market, but at the low and middle end of the market, because pricing is too high, that market is locked up. At the low end of the market, 70 to 80% of transaction volume has completely disappeared. And the market is going to clear at much, much lower prices. So here's the good and bad news on that, Alan. The good news is that pricing will come down, and as 1/3 of the CPI, when housing prices come down, we're going to see a reduction in inflation, and the Fed's going to claim victory. Here's the bad news. The bad news is because mortgage rates have gone from under 3% to right around 6%, a little under, a little over, depending on your particular credit rating and circumstances. Housing prices will be lower, but your monthly mortgage payment, if you're buying a house, will not be lower. And so housing prices will be down. Inflation will appear to be down, but affordability won't be better. Now, we put out an article last night saying that one way or another, we're all going to end up in the same place. And so here's our thinking on that. And we believe that Fed Chairman Jerome Powell is serious about reducing inflation. He admitted he was slow, he was late. He was. To his credit, he's acknowledged the mistake and said, we are going to get this under control. And by the way, we're prepared to send the U.S. into recession. I mean, basically said that to Congress yesterday.
Because there's really nothing else to do at this point, right?
He has no other options. What he's doing is awful and his only option. He has no other options. He's doing the right thing. And, we were asked by Real Vision back in November about the choice to reappoint Chairman Powell as chairman of the Fed. And we said he was the best option available, right? The White House did the best thing they could do at the time. Powell's doing the best thing he can do at the time. But we have two possible options here. One is that the Fed rate hikes won't work, in which case, guess what we're going to get? More rate hikes, and the market's not prepared for that. What happens if instead of one more 75 basis point rate hike, we get 4 of them, right? What happens if instead of a target Fed funds rate of 3.4% by year end, we're at 4.5% or 5%? This is an unlikely but possible outcome. And if that happens, the market's coming down. But now let's go to what I think you and I see as the more likely version, which is the rate hikes work. And what we just told Alan is true, that inflation is going to come down and Powell declares victory on that. Okay, fair enough. But guess what? It's going to throw the US into recession. And one of the things we were just looking at last night is earnings estimates on the S&P 500 over the last 3 months have gone up, not down. So, Paul, if rates go up and the US goes into recession, what's going to happen to the E on the PE ratio? It's going to come down.
It's unbelievable, Gary. I mean, I don't think we've ever seen this in our lifetime, right?
No, the last analog we've seen to this was in the late 70s, the end of the Carter years, when Paul Volcker, the chairman of the Fed at the time, took interest rates. Help me out. Was it 18%? I think. I think he took the Fed funds rate. It's something I could be wrong. Someone will correct me. But I think around 18%. And he could do that, but Powell can't do that at this time. And the reason is, again, someone's going to have to correct me. I think U.S. debt at that time was in the neighborhood of $1 trillion, give or take a little bit. I don't remember exactly. Someone will chime in with the answer. But at 30 trillion, we can't do that. At 3%, all of U.S. tax receipts go to fund interest on the national debt. So we shut down the military, education, Medicare, Medicaid, everything.
Right.
All we have is money to pay off the national debt. So Powell doesn't have the same rope that Volcker had 40 years ago. That's simply not an option. And then the final question was, hey, are we looking overseas for value? I think other countries are having similar problems to the US, but I would actually punt that question over to IronHold Capital. I think you guys are much more experienced and knowledgeable in the realm of international and global investing than we are here. Maybe we should do a webinar with you and Sid talking about your point of view on where you guys are finding value in the world, because I'd love to hear your take on that.
Just very quickly, we look at countries much like we look at companies. We want to see the amount of income coming in and the amount of debt on the books. So if you look at America as a country, it's a little bit concerning. There are niche markets where you find great opportunities like the ones you're pointing out now. But when we look at places like India, China, places that exert good influence on society, right? Not necessarily an authoritarian regime like Russia, have a fair legal system and have a very good balance sheet when you think about it. So we find a lot of opportunities there. And I thought it was interesting because Seth Klarman mentioned it recently as well. But going back to my question, Gary, how are you looking at companies today in reference to pricing power?
So one of the things we really like are companies where either pricing isn't an issue or where they're offering a lower cost option. So, and I'm gonna preface this by saying we've been wrong on the stock so far, but we've been huge fans of online education, Coursera in particular. Now, mea culpa, we recommended that stock at a much higher price than where it is now. But let's take a look at where we are. And a 4 to 5 year on-campus education tends to run people in the neighborhood of 6 figures. And there are people graduating with $250,000 of debt in degrees that aren't likely to get them jobs. Coursera is providing degrees and education for people and job training for people at a tiny, tiny fraction of that cost. People don't have to live on campus. You don't have the expense of having to live in an expensive dorm and eating dorm food and buying the meal plan. The all-in cost is just so much lower. And, you were talking about the advantages of India. One of the things we love about India is they have a young, very driven, education-oriented culture there, where people understand that if they can get a degree from a good school, that will lead to a good job, and they're prepared to work very hard to get there. And I know you and Sid are well aware of the positive demographics that India has. So now think about it. If you were 18, 20 years old in India, if your family has a lot of money, then yeah, you can manage to send your kid to the United States for 4 or 5 years for the on-campus experience, for that education, but you're looking at $250,000. But if you're someone else in India without access to those kinds of resources, being able to get an online education and not have to deal with U.S. immigration, with green cards, with expensive travel back and forth, with, out of state / out of country university fees, and also be able to get a degree on your own time, which means you might not need 4 or 5 years to do it. Maybe you could do it in 2 or 3 years if you study hard and work hard. That all of a sudden becomes very appealing.
Gary, let me ask you this too. I want to end on a nice note because I think we instill so much fear in people today. And I say this very humbly. I do believe this. When you look over the course of history, the last 100 years, let's say here in America, whether you're looking at the Great Recession of 2008, the dot-com bubble of 2000, the market crash of 87, right? The Kennedy assassination of 63, no matter how tragic the situation, the stock market always came back, right? Because like Warren Buffett says,
just cut out for a second. Can you ask the question? I heard you talking about 1963, and then I lost what you asked after that.
How about now?
Yeah, much better.
Well, what I was saying, in 1963, President Kennedy was assassinated. All these tragic things have happened in our past, unfortunately. And although the stock market did rescind for a short period of time, it quickly picked up from there. And like Warren Buffett says, in the short term, the stock market is a voting machine. In the long term, it's a weighing machine, right? So as long as we live in a capitalistic society, as Adam Smith said, the invisible hand that governs society and promotes good businesses, we should prevail in the long run. I think times will be tough here in America in the short term, but that's not to say that there's a bright future ahead of us. It might not be, what we experienced as the top of the world order, where we controlled currency as a reserve. But it's not to say that things are going to go in dire straits. That's just my personal opinion. I'm curious to get your take on that.
Yeah, I think it's a really smart and insightful view. I think particularly in the United States, we have to take the long view. I have a split opinion on this. I'm very concerned by the expansion of the size of government, by the amount of government power, by the influence that government is having in our daily lives, by government spending, which is debasing the dollar and taking our savings, and by the demagoguery, the possibility of people saying, give me power and I'll fix all your problems, right? Mm-hmm. I'm a big fan of that, Reagan saying, when he said, the scariest words in the world are, I'm from the government, I'm here to help, right? But I'll tell you what I do have faith in. I have a lot of faith in the American people. I think the American people are smart, industrious, and have good hearts. I think we have a 250-year history of working extremely hard, starting businesses, being entrepreneurial, being creative, solving some of the world's most complicated problems. And, I've noticed in our culture over the last few decades, people like to spend a lot of time pointing out America's failings. And it's true. We haven't always been perfect as a people, but one thing I do see in this country is a constant effort to be better, a constant effort to improve things, a constant effort to try to make sure that we have equality under the law. And we haven't always been perfect, but I do have a lot of faith in the good hearts of the American people and the incredible work ethic that people have here. And that can get you out of a lot of problems. And I think the best thing that the government can do to encourage that is to get out of the way, to reduce regulation, reduce taxes, reduce its money printing, reduce its influence in our daily lives, and get out of the way. And if they do that, I think the American people are incredibly industrious and can solve a lot of problems. By the way, Paul, just one thing, I think Jacob has chimed in with an interesting question as well. If we want to take that one too.
Wonderful. So it seems like Jacob's asking, I'll just read it out loud. We are heading towards a multipolar world if Russia is not beaten in Ukraine. Will this cause a general deglobalization in where we produce things? And will this make producing less efficient and cause a longer economic downturn?
Yeah, Jacob, that is a phenomenal question. And I'm actually going to paraphrase the work of somebody who I respect and admire. Lynn Alden has done some phenomenal work on this. If anybody isn't reading her work, I recommend it. I think she's really smart, does a ton of work, very insightful. And I was reading Lynn Alden's monthly letter a couple of months ago. I was actually in the airport in Lima, Peru at the time, and that's what I was doing at midnight. I was reading her letter. And what she talked about is over the last 30 or 40 years, what we've had is an enormous amount of deflation due to optimizing supply chains. So we've seen two things. We've seen shift of manufacturing from places like the United States and Europe, where the labor force is expensive, to places in Asia where the cost of manufacturing is much lower. And that has been deflationary. The second thing that we've seen is companies have gotten very, very good at logistics. And we've gone to things like just-in-time manufacturing, just-in-time inventory. And that also has reduced companies' capital costs. And so for 30 or 40 years, we've had this huge deflationary effect from globalization and from specialization. And so what Jacob's asking is, wait a minute, if the world starts to fracture, what happens to that? And Lynn's hypothesis, which I agree with entirely, is that reverses. The current supply chain is inexpensive, highly efficient, and very, very fragile. And that's what we've seen over the last couple of years due to COVID. Somebody shuts down a port and nobody has supply. We have chip plants that get shut down in Asia and American car companies can't manufacture. And if you look at the Manheim used car index, it's showing the cost of a used car is up something like 40% year over year. And that's because chip plants in Asia shut down and ports shut down, and the system we have is very, very fragile. And so what's going to need to happen is we are going to need to decouple a certain amount. And there are certain things that we were talking about that we're making inexpensively in Asia that we need to make here: pharmaceuticals, semiconductors, and we're going to need even things like PPE, right? The COVID is not the last pandemic we're going to see in our lifetimes, and to have safety equipment that we manufacture in this country that we have access to in case of an emergency, this is a big deal. And it's going to cost more to produce those things in the United States. Companies are, because supply chains are fragile and breaking down, going to have to carry more inventory. And so, Jacob, you're right. We are heading more towards a multipolar world. And what we're going to see is a reversal of these very inexpensive, very fragile supply lines go to more expensive manufacturing and more robust supply lines. And that's going to create some inflationary pressure. We're going to have to pay more for goods to know that we'll have the things that we absolutely need.
Wonderfully said. Well, Gary, it's been very nice speaking with you again. Thank you so much for this wonderful insight. And we look forward to having this conversation again soon.
Terrific. Paul, thanks so much for being on. Looking forward to the next conversation with you and Sid.
Thank you. Thank you, everyone, for joining. Have a great day, guys. Bye-bye.
All right. Thanks.